Hi, everyone. Welcome to our market update the day before 4th of July. Just dropping some quick information. Keep it under 10 minutes. If it's your first time here, please comment, subscribe, reach out, whatever you might do. We have a clicker going below. Just started going that. Active property, pending property, so on and so forth. If you watch us for the last month or so, David and myself have a kind of a running bet going. He thinks by the end of the year we'll get to about 7,500 properties. I think we'll probably max out about 7,000 properties. This week, man, it went closer in my direction. We were at 6,180. Now we're back down to close to 6,000.
Yeah, but that's also 4th of July. It's like everyone quit working yesterday. And I'm still going to tell you, I still think, maybe I won't be right to 7,500, but I think even if we hit 7,000, that's massive because there was an article that came out in the Wall Street Journal. It came out today. I think it's today. If you Google Wall Street Journal, Florida real estate, it's saying Florida has one of the worst markets in the entire United States. In one area, Cape Coral, which was the same area, if a lot of you remember, 2008 to 2010, that had the highest amount of foreclosures in the whole state of Florida, is once again, they have 12,000 properties on sale on their MLS right now. 12,000.
I mean, the thing that we have to think about, we didn't have a lot of new construction like a lot of these other places that had built out, like Texas. They're hurting pretty bad up there, from what I hear. Their prices are going down. We have seen a little bit, and I'll share the screen right now. We've seen a little bit of a drop to the median detached price. Let me see that fast.
Well, so as long as you mention that, Vinnie, you look at that thing in Florida. If you're looking to pick up investor properties right now, that tells you where you could buy for cash flow. That's an interesting thing. And then the other thing is they compared that in the Wall Street Journal to the state of California. And the state of California where they listed over 3.5 million unit shortage in the state of California. So we're just not building. And if you think we're going to have a crash like Florida just had right there, we're not, because Florida actually built tons of houses and we're not building jack here. So,
and one of the things you got to think about too is basically, I think there was just a thing in San Diego County, the rent rates just went up a little bit. They went up a tick, right? So remember, the higher the rent rates go, the more palatable it is for people to buy a property, that in turn is going to push the pricing up. So,
that's interesting, Vinnie. I'm going to do something really quick in my pocket, because a lot of people say, rents and stuff. Well, this right here is called a wad of hundreds that I just picked up from 2 different rentals. So if you're saying being a landlord doesn't pay in rents, well, I hate to tell you, but this is a wad of hundos, and apparently that's fake. Because, man, I love it when I hear you say rents are going up. Vinnie, you're talking my love language here.
Well, I mean, that's the thing to think about, right? Is the rents are going up, so that's going to play a factor, right? Because as we talked about immensely, one of the things is it's hard. Buying a house is not right for everyone right now, right? Because let's say you're paying, $3,500 for rent, and that same property's, if you bought it, you're putting down 5%, and then you have to pay $5,000 or $5,400 or something like that, right? Are you going, maybe I can keep that extra $2,000 that I would have put towards a mortgage, and I'll put it into the stock market, or I'll put it somewhere else and make it work for me, right?
Man,
so
you got a good. I like where you're going, Vinnie. This is very smart what you're thinking here. Please carry on.
No, I'm just thinking that, so it's not, buying is not for everyone, but again, the higher the rents go up, right, the more palatable. Now, if that $3,500 that you're paying goes to $4,000, and your mortgage is, let's say, $5,400 or $5,000, right?
It's probably $5,400 is more realistic, but still, that's a good point, because it's not for everybody to buy a house. But you're right. Once that gap differential is like that, that's huge. And then let's just take a worst case scenario. Let's say your house only appreciates 3%, and you bought for, let's say, $800,000. Well, that means you made $24,000, which that you made all your money back the first year.
Yeah.
But
So
still, I agree with you. Not everybody should buy a home,
but it matters on what you're doing with that excess. That's, I think, the biggest thing you think about. Not everyone should buy a home, but at least have a plan for where you're going to be next in 5 years, 10 years. Talk to a financial advisor. If you're not going to buy a house, at least set yourself up for the future. If you simply just go, hey, I want to buy a house and I'm going to take care of this house, I'm going to live the property for 10 years, more than likely the value of that property, because it's been in the history, it's never happened where it's been less of it, it's going to be worth more than it was basically 10 years ago, right?
Yep,
And
I would agree with you on that.
Right? And you're talking about with that amortization, you're going downward. So if you're taking 10 years off of making payments, consistent payments, you're going to be equity. So even if the values drop and go back up to that same price you're at 10 years later, you still paid off about 10 years of equity on the interest on the property and equity.
Well, and not only that, it's like if you want to, just go to Chat GTP or Gronk or Google or whatever you want, and type in your zip code, and then ask them what is the average rent increase, and then pick the exact house you live in. Say I live in a 2-bedroom 1-bath condo, and I don't know, pick a zip code 92104.
Yeah,
and then ask it what's the average rent increase, and look at the answer it gives you, and then you can see right there, like, if you're going to continue to be a renter and the average rent increase is, let's say, 5%, 6%, 7%, depending on where you're at. I mean, look at where that rent's going to be in a couple of years and realize, do I want to live here or am I going to move? Because unfortunately, which once again, I agree with Vinnie, not everyone should buy a house. But if you're going to live in California long-term in San Diego, if you eventually don't own your place, strategy you have is to move.
And you know what? And I wish someone would have told me when I was younger about the idea of house hacking, because right now we're getting back into that window of time that house hacking is possible for a younger generation, right? Because you get down payment assistance, you get basically you factor in the rental income on the back unit, then you get your buddies to rent different rooms out, rent the garage out, and now you're actually paying for the mortgage or with what your rent would be with the other rooms, right? So it's more feasible now with this kind of lag to the market. So I mean, for a younger person right now could actually be a really good time to take advantage of this kind of little lag.
Yeah, and buy a 2-unit, a 3-unit, or 4-unit only. That's what you should buy. Like,
well, I mean, I was looking at it. There's some
64 units.
Some duplexes that are about like 700, 750 right now in San Diego County, which is crazy.
That's what you should be getting. If you are going to buy a place right now and you're a single person, you're not married, you don't have kids, or if you are married and you can pull it off for your wife to live in the duplex or triplex or 4-unit, buy that. Don't buy the condo. Don't buy the single family. Buy the units and get in now and do that, because that is your best bet. Because I agree with you, Vinny. Even though I've been in the business forever, my first house was a house. I bought a house.
Yeah.
Had I been smarter way back then, I would have bought 4 units.
Yeah. I mean, I think it's difficult when you're younger, because especially with the first time buying, right? Buying off of like a game plan compared to buying off emotion. So yeah, if you could buy basically at least 2 units or 3 units or something like that, I think you're going to be better served in the future.
Yeah, so, I agree. Just a quick note, because we got 1 minute left. For those of you out there who are wondering, look at interest rates. The best week we've had in a long time. Look at that graph, and those rates right there. Those are I would consider those good lenders. But you got to remember, retail lenders and banks are all going to have higher rates in that. If you go to somebody that's direct to the source, like myself or other loan officers that are set up independently, you can beat those rates by a massive amount, by probably 0.5% on every single one of them. Like, let's take a look at that really quick. Just scroll up to the 30-year. Yeah, look at that. Yeah. 6.75. You could easily got 6.25 today all day. And the other thing is with the VA, look how bad the VA rates in the FHA. Those are terrible. Those are back down at like 5.75. let's say APR 5.875, and that's for no points. So you can do way better than this.
Guys, if you have any questions or anything that we can ever help you out with, my information, David's information right there. Keep it short and sweet. Please subscribe. Please reach out with any sort of questions that you might have. Thanks, guys.
Boom. Happy 4th.